Good day to all. This is our discussions involving internal and governmental financial auditing, as well as operational auditing. First objective is to explain the role of internal auditors in financial auditing. So this is the definition provided for internal auditing as an independent, objective assurance. Also, objective assurance, again, and consulting activity designed to add value and improve an organization's operations. So, in fact, internal auditing is closely related to operation or operations auditing, which is also one of management consultancy services that can be provided. Well, for our operations auditing, though, the target there is to be able to provide recommendations for the improvement of the organization's operations. So, in fact, very closely related to internal auditing. Then, this is independent because the practitioners, of course, have to be independent as a whole or in total or in fact, not just in appearance, but also in the mind, or not just in the mind, but also in the appearance. Then objective because this is bound by profession and we are going to make use of professional judgment in dealing with the transactions. So here are the three areas by which we actually look into internal auditing, and then we improve these three areas when it comes to operations. So we have the risk management, controls, and governance processes. All right. So for internal auditing, there is provision, or we provide value through improved operational effectiveness at the same time while performing traditional responsibilities. So as what we've said, again, we want that the operations will be improved. So after we have examined the corresponding operational aspects or facets of our client, then we are going to make some improvements when it comes to the effectiveness. So, in other words, how fast and then how they are able to achieve the company's goals and objectives. So, we've mentioned about how fast because later on we would be able also to include efficiency along with that. Then traditional responsibilities could also be included. So we have here examples: reviewing management information, we ensure compliance with applicable laws, regulations, and provisions of contracts, and also safeguarding of assets because management would act as the guardians or the safekeepers of the assets or economic resources of the client. Then here are the ethical principles that should be maintained by internal auditors in doing internal auditing. So these actually are also similar principles or characteristics to be possessed by practitioners even in financial statement auditing or audit, as well as for management consultancy, among others. So we have integrity, in which there is really trust and confidence and fiduciary characteristic that is maintained along the way. So the practitioners can be trusted in dealing with the engagement. Then after that, we also have competency. So the practitioners have their necessary expertise, educational qualifications, and backgrounds to do the job right up to the end or completion of such. Objectivity is maintaining impartiality or not being subjected to biases in dealing with the engagement. Confidentiality is maintaining or keeping confidential or private information about the client, not divulging, not disclosing any information that would harm or that would affect detrimentally or negatively the client's sake or welfare. So that's confidentiality along with the four. Next, we also have the rules of conduct that should be maintained. So these rules of conduct very similar to the previous four ethical principles because they work hand in hand. So the rules of conduct will be the specific steps that should be followed by the practitioners or internal auditors in this case in dealing with the engagement or internal audit or audits. So the guidelines should be followed, and then this would help the practitioners to be doing their jobs professionally and ethically also along the way, and that they would not be subjected again to certain unbiased assessments or matters. Also, this would help them to be prudent and to be careful, cautious in dealing with certain private or confidential information. Next is a relationship of internal and external auditors. So internal auditors are, of course, from within the organization, so they are responsible for management. However, internal auditors, although they are part of the company, they are within the payroll of the business, but the internal auditors should not be reporting to those performing line functions. They also have to be objective and independent as much as possible. So they would be reporting to the audit committee, for example, of the board of directors, especially that the other members of the board could be also holding line functions. The reason is that it's very awkward for the auditors to be reporting whatever they found out in the audit to those people to whom they are auditing. So that's going to be preposterous or outrageous then. On another hand, external auditors really are from the outside of the organization. Normally, they are being there or they are doing their jobs on a case to case basis only for the purpose of the engagement, which is the financial statements audit. But then also for internal auditors, especially for the jobs like internal audits, these can also be done, by the way, by external parties. So there are also auditing firms that would perform internal audits. Okay, so both must be competent, objective, and use a similar methodology and consider risk and materiality. That's very true. For the methodology discussed in the previous slides that we've had, so we begin with preliminary understanding, we assess the control risk, then we are going to perform now the procedures. So starting with the test of details of balances, then we have analytical procedures and so on. So something like that. The test of controls, of course, prior to the test of details of balances and substantive tests of transactions. So those particular items should be there. But if we talk about the format, so understanding the client business risk, then the control risk, then the TOC and the SPOT. Hopefully you still remember the acronym. So test of control and substantive tests of transactions. Then quite a word or anyway, so substantive tests of transactions. After that, we also have the analytical procedures, then the test of details of balances with the balance related objectives. All right, so those are the steps. Second, we describe the auditing and reporting requirements under government auditing standards and the Single Audit Act. So for governmental financial auditing, this is by the way with the US, they have their authoritative literature for performance of government audits. In the Philippines, we have, of course, the guidelines provided by Commission on Audit. So there in the case of US, they have the government auditing standards, and then which is called the Yellow Book. So the Yellow Book standards are also or often called generally accepted government auditing standards. So we also have this particular government accounting standards or GAS in the Philippines. So anyway, whatever that book is, whether in US Yellow Book or in the Philippines, what do we get from there? So this has to be consistent with generally accepted auditing standards. So these are our standards in doing our audit, and they provide additional guidance because we're talking about government auditing. So we have to check materiality and significance, quality control, reporting, and compliance auditing. So these items have to be checked. And of course, these terms also are very familiar to all or to us guys. Second, or the next item would be for Single Audit Act. This is the rulings actually from US, so we don't have to be burdened about this much. So the threshold for requiring a single audit there is $500,000. So in our case, it's actually different here in the Philippines. And this contain requirements for the scope of audit. So we have the compliance with their government accounting standards, internal control risk, and legal compliance also, which is true in the Philippines as well. Then reporting requirements, an opinion on statements in accordance with GAAP, meaning the PFRSS. So a report on, or meaning to say there has to be a report on internal controls. So an opinion on schedule of federal awards, example, federal, this is the government. So there has to be legal compliance and then the findings and questioned costs. Although if, for example, this is all about government accounting, so all of them can be found out on the report. So opinions on the two and reports on the three. Next, distinguish or differentiate operational auditing from financial auditing. For operational auditing, the purpose of this is to determine the effectiveness or efficiency of any part of an organization, which is very true. We look into how the organization would achieve its objectives and how do they do that with the least amount of resources. So how they do the right thing and how they do things right for effectiveness and efficiency respectively. Financial auditing, on another hand, of course, will look into the economic information contained on the financial statements, primarily historical and quantitative in nature, and whether the prepared financial statements and I mean in accordance with or are in accordance with our GAAP or the acceptable accounting framework, or to be more specific, the Philippine Financial Reporting Standards. So financial auditing is focused more or emphasized more on the correct recording of historical information, while operational auditing would focus again on effectiveness and efficiency. So next to that is overview of operational audits. We have effectiveness versus efficiency. We've already mentioned this one a while ago. So effectiveness is looking into being able to achieve or accomplish the objectives, and efficiency is being able to achieve such with the least amount of resources. To be specific, or as an example, if we talk about the cost, so reduced or reduction of costs. Next, for effectiveness versus efficiency, we have an example. For inefficiency, let's say the acquisition of goods and services is too costly. So what can we do then? Or as an example, we have bids for purchases of materials are not required. So we cannot look for options of having or so again, no options to acquire the least cost for the purchases. Next, raw materials are not available when needed. So this is a matter of the suppliers and could be sources within the business or department. An assembly line was shut down for lack of materials. So of course, we have to look into that particular issue. Duplication of effort by employees exists. Supposedly one can do it, but there's duplication. Clearly, that's inefficiency. Production and accounting keep identical records. So if we keep, for example, database management system, so we can just merge the information in one repository and we can minimize cases of duplication. So another one also is work is done that serves no purpose, meaning it's just a job that is there. We are paying for the salaries, but no purpose overall for the organization. It does not contribute for the achievement of business goals and objectives. Example, vendors' invoices and receiving reports are filed without being used. Yeah, that's true. And there are too many employees. Office work could be done with one less assistant. So those jobs supposedly which are no longer needed should be removed, or others could be transferred. So we have to look also into the legalities of that. Well, what's the relationship between operational auditing and internal controls? So we have to take note that in operational auditing, we also evaluate the effectiveness and efficiency of internal controls. And if we found out that, of course, they're effective, so we can now minimize our substantive test of transactions. So overall, what can it contribute? So it would contribute or help also in reliability of financial reporting, because you have to take note that the financial statements or financial reports that are produced by the accounting processes, of course, accounting processes would be done manually or computerized, but in today's world, normally computerized. And if we do audit also with our computerized environment systems, so such could be part of operational auditing, especially if we look into the effectiveness and efficiency of computerized accounting processes, as well as the internal controls related to that. So if we found out reliable, then we can safely presume or assume that our reports are also reliable, although not 100%. Then effectiveness and efficiency of operations, or the reverse has said or has been said, compliance is done. Then types of operational audits, we have the three. Functional, so this is per department. Functional departments like purchasing, that's one. Marketing and sales, that's another one. Credit, if there is a department that is in charge really with the granting or approval of, let's say, loans, or let's say sales of products, either goods or services. Then we also have finance, another accounting, human resource or personnel, information technology, and etc. Organizational is the organization or business as a whole, or could also be a branch or a subsidiary or associate. Special assignments could be specific items or jobs in the function. So example, for a functional department of human resource or personnel, if you are examining, let's say, only the for auditing the effectiveness and efficiency of recruitment and selection, so that's special assignment. For accounting, if you are just looking into the revenue cycle, let's say, or we can be very specific about sales only, especially for credit processes, then that's special assignment. Who performs operational audits? So it can be internal auditors. So either within the business, there is really a separate department for internal audit, or just a staff, that's possible, or the services of internal auditor or auditors are outsourced from firms, so are offering such, or practitioners. Freelance practitioners could also be employed outside of the organization. Next, government auditors also can perform operational audits for the government operational processes and the related agencies, instrumentalities, or political subdivisions or agencies, or bureaus, commissions, and departments. Then CPA firms, well, as what we've said, can also perform these types of audits. Independence and competence should be maintained. So independence should again be total or overall or as a whole, both in the mind and in appearance, both external and internal or reverse. Then competence would have to look into the educational background, the training, seminars, licenses, accreditations, experiences, and the likes. Then these are the two most important qualities for an operational auditor. It's a plus for the two, not either. Then plan and perform an operational audit. So we look into the specific criteria because this is operational. So we look into other bases of benchmark or standards. So normally there is the framework of COSO, COSO Framework Committee. of sponsoring organizations of the Three-Way Commission, in which our objectives for internal controls are being lifted from. Then there are so many. There are also like COBIT, or Controlled Business Information Technology Standards. But then depending on that particular operational audit, there are certain specific criteria to be used or are desirable for such. So sources of criteria include historical performance, the trends or patterns based on history, then benchmarking. So we compare it with either the sister company or another department or another organization. Engineered standards or manufactured or created standards, and discussions and agreements professionally made. Phases and operational auditing would begin with planning. So we'll look into who will be employed in the engagement, what is our scope, meaning to say, where is the beginning and ending, how deep, how extensive, how intensive our respective jobs or our audits. Then controls to be established. Evidence gathering and evaluation. We should be able to provide or gather evidence as needed for us to support our evaluation or our conclusion or opinion. So it is through these evidences that we will be getting our conclusions, or we'll be basing, not the reverse. So we have so many. We have observation, we have physical inspection, we have reperformance, recalculation, and so many or much more. Documentation is in fact shown. Then reporting and follow-up is also important. We report our conclusions, and it's really possible that we will not be finished right away or that instance. Therefore, we have to do follow-up. There will be findings and very important recommendations because it is operational auditing. All right, so that's the end of our discussions. Thank you very much for listening, and God bless us all.